Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So if you remember, in the weekend we discussed a couple of scenarios. So first of all, downside action, and then potential ABCD pattern that theoretically might be formed if market will be able to stay above the intraday 618 support area. So currently, if you'll take a look at the chart in general and the performance of the gold on intraday charts, it's obviously we could say that gold is weak, so it stands under pressure, and with more confidence that we could say that probably action to the 1950 area, some another leg down here, seems more chances to happen than the kind of the ABCD, and there are a few reasons for that. So first of all, it's of course overall fundamental backgrounds. You know, no agreement has been achieved on the debt sale. Janet Yellen is writing millions of the letters to the White House, warning them that it will be the problems with the financing on the budget spending, government spending. So this is a bit nervousness on the markets, and that's kind of the performance and general environment. It's obviously demand for the dollar is rising. So we already talked about this. It's last week and 2 weeks ago. So from that standpoint, overall background is not healthy for any bullish reversal by far. Besides, if we'll take a look at the hourly on some technical moments, for example, on a 4-hour time frame chart, we have uncompleted XOP target. So that was the OP, somewhere around 1965 has been completed. Minor pullback. This is our bread and butter trade. So recall what we talked about, this thrusting downward action. That's the point where we said that's probably because they're taking the short position. It's minimum 618 support could be achieved, but at the same time, bread and butter could become the starting point for the just downside continuation. And if you have taken the short position here, you probably could hold it for longer. Existence of the uncompleted XOP is also will press on the market, because market naturally will gravitate to this area. It's trying to complete it. So with this upward bounce, despite that it was rather fast, as you can see, it's kind of the even bullish reversal bar had been formed, market was not able to break through this previous consolidation. So you can see it's just stuck inside of it in the lower border of this, and then turns down. Besides, when taking a look at the hourly chart, you could see that the rally that has started previously has been totally erased. So market taking out of these lows, this rally is destroyed. Market taken out of the C lows, ABCD pattern is not valid anymore, although actually it has been completed anyway. But here is market actually is forming bearish reversal swing. So this swing up is smaller than the swing down. 618 level is broken. So all this combination will significantly drop the probability for the possible ABCD performance. This is not the way usually as market starts and holds ABCD action, because on the daily chart, actually our suggestion that it might be ABCD retracement was based on this, as you could see, engulfing pattern. But now the market mostly has erased this engulfing, and right now is mostly almost challenging the lows of this pattern. This makes me think that, well, more chances that we'll get just downward breakout and downward continuation. We could suggest probably some kind of the double bottom here, something of that sort, right? So for instance, if market will form the Russian wrist or something of that sort, it theoretically might be. But I am really not comfortable with suggesting double bottom, because we haven't completed XOP target. So if XOP would be completed right there, it might be an absolutely different story. But in current circumstances, chance of downward continuation is more probable. So that's why if you have the bullish view, would like to buy gold, you could watch for a double bottom, and if market will form the Russian rinse here, so for instance it will drop, grab the stops below the A point and shows the fast return at backup, well, you could try to jump in placing stop slightly below the Russian rinse. In this case, it will be perfect entry. Your loss, potential loss, will be very small, and who knows, maybe it will work somehow. For the bears, its opposite thing is correct. So you could try to use stop sell order somewhere slightly above the A lows. It's around 1953, 1952 area. This market will break down the lows, taking out the stops, collapse here. You could move stops to the break-even and see what will happen. If it will be Russian rinse, you just sit in the hands and see what will happen. If market will just keep dropping lower, all the better. So you will be in the market, and this will be great. So that's approximately what we have on the gold. And let's see what will happen.